we need to understand every single fundamental events, and we need to have a checklist of these events over the weekend for the entire week ahead of us. And you can make an Excel file, you can make a, preferably on a paper, just write it down so that your hand is used to it, your eye is used to it, and your brain is used to it. If you really follow this structure and you make sure that you have done your weekly homework over the weekend, you are already one step ahead of the market, because you would not be trading at a time that would not be suitable for you. So go on a2zforex.com and take a look at all the events that Nasir has outlined today for the week ahead article, and make sure to follow it. In the meantime, today we'll be looking at one extra pair, as I informed, and that pair is New Zealand dollar. For the fact that if we look at it on weekly time frame, we can see that New Zealand dollar has been falling sharply in the last 2.5 years, but for now the pair has found itself a resistance. And if we combine the resistance and support, by the way, not just resistance. So if we combine the highs and the lows of the market for now, we would be seeing that we have the following triangle. And just like we analyzed euro dollar last week, and we commented that if that level is broken, sorry, the previous week, if the triangle is broken out, which is likely to do so, we would see an upward change in the trend. You may be asking, why do I believe that there is a possibility to see an upright movement? And the reason is quite simple. We have a one higher low over here, and we have had one fake breakout above the previous resistance as well. Furthermore, the pair has got extremely close to the moving average, 50-week moving average that we are looking at right now. If we look at the pair a little closely from Fibonacci point of view, and just combine this level over here and go on daily time frame, we can see that so far the pair is looking for the golden cross on 250 day moving averages, and that's a bullish indication. And at the moment the pair is trying to push above the 61.8% Fibonacci retracement zone. That being said, today in the evening, European time, we will have the New Zealand fundamental developments, retail sales. So it is highly important for you to make sure that you follow that news as well. So it's very much likely that we will see a break above the level over here, just above the daily, the weekly high over here, which is 0.6760 level. So a break above 0.6760 level will give us an opportunity to long the pair, and our immediate target will be at 88%, which is 0.6820. From there onwards, next target will become 0.6890 level, and that's in total. It's not a crazy profit opportunity, but nonetheless, we are looking for approximately 120 pips of moving on the pair initially. The overall kind of mini swing targets that we have lies on 0.6950, and if that level is achieved, just like the way we are commenting, we should be having at least 180 pips profit opportunity there. But let's also take a look at it on hourly time frame to see whether our analysis is making sense or not. Let's just zoom out. We can see that the pair has already entered into a kind of a bullish development on hourly time frame, for the fact that we have had the crossover of 250 moving averages, And whenever that happens, generally it's a indication and syndication for bullish development. So at the moment, we have that intact view, but just in case if something happens fundamentally today and we see the pair going on a bearish movement, I would actually go ahead and place a buy limit order as well at 0.655 level, 0.6505 level. So from here onwards, once again, we would be aiming for the level of 0.6820 and 0.6950. So that, if that is the case for us, we would be having approximately 370, 380 pips of profit opportunity. This is for New Zealand dollar, US dollar. Today's webinar, by the way, is sponsored by ADS Securities London. So I also recommend you that whether you trade or you analyze, you make sure that you trade with the brokers that are approved by A to Z Forex, because we have tested them on execution, we have tested these brokers on account opening, we have tested them on compliance, regulation, of course withdrawals and so on. So please trade with the approved brokers only, so that you don't get to be a victim of scams that are rolling all over the market. And you would be surprised about the number of scams that are in this industry. So I highly recommend going at least and checking out ADS Securities London. So let's move onwards. We will be looking at now on the crude oil, WTI. This is WTI. On ADS Securities, they are going to the cent level. So it is $29.12, and it's also the 100 of the cents also outlined here. So it kind of gives you better opportunity to trade crude oil on this platform actually. So looking at it, as we discussed on Friday and the previous days, we have had long positions at from Friday, $27.30 level, approximately over here. That was our long position. So far at the moment, we are looking for well, over $1.80 development, which is 180 points development or into positive side. But the pair has not really broken above the 100% Fibonacci retracement zone. So for the time being, if you want to enter long positions, you will be looking for a break above the 29.75 level, which is 100% Fibonacci retracement zone. Your immediate target will become at $30.30, which is 88% Fibonacci retracement zone. And from there onwards, your consecutive targets will become at 61.8% Fibonacci retracement zone, which is 31.15, 50. And finally, last but not least, we will see a definite reversal at 38.2% Fibonacci retracement zone, and that is $32.80 level. Just in case if my analysis is mistaken and we see the continuation of the bullish trend, I will place a pending sell limit order for the pair until the end of the week at $34.12 or $34 actually 15 cent level. And from there onwards, I'll target my shorts at $30.30. This is the outlook for crude oil, WTI. Now, let's take a look at Japanese yen. I would like to ask you, do you know why Japanese yen or USD Japanese yen went on bullish today and then went on bearish for the afterwards? Can anyone comment about the reason behind the bullish move, and also the reason behind my bullish entry from Friday? So the reason behind the fact that USD Japanese yen suddenly started to rise, starting from the end of the last week, is because of the fact that the market was looking for the GDP announcements from Japan, and the Japanese economy once again started entering into the shrinking mode. The previous quarter, the GDP figures was 0.3% positive, whereas the GDP figures announcement for the last night came -4%. So if you look at it overall, you are actually looking for a shrinking economy of 1.2%. And that's not good. It's negative for Japan, it's negative for Japanese economy, and of course it's negative for Japanese yen as well. That's the main reason why the Japanese yen is so far on a bearish mode, while US dollar is gaining ground on it. That's why the USD Japanese yen is on bullish mode. So based on our analysis from Friday, we were looking for we actually did place a buy order right over here, 1.13.05 level, if I'm not mistaken, it was. And from there onwards, we are right now approximately 60 pips on profit, and the best that we did was 100 pips. But one very important point right now is the following. Let me zoom out so that we can see it a little better. If we look at the trend line that I've drawn over here, which was a very strong trend line so far, we can also actually play a little around it. I think this will be better trend line. I believe the previous one was not the correct one. So if you look at it overall on this trend line, I should make it bigger so that you can see it, what I'm talking about, the red trend line that I'm talking about. We can see that USD Japanese yen has finally broken above it, and it did have a couple of candles closing above this level. So it is an indication that the bullishness is yet to be starting. And overall, if we combine these two candles together, the Friday and Thursday candles together, we get to have a candlestick formation that I have given, which is called reversal or sword candle, that I call it. Just combining these two, we have a perfect sword candle. So that gives us an opportunity to believe that the next 2 days will be bullish. So once again, combination of the last two candles on daily time frame from Friday and Thursday gives us a sword reversal candlestick formation, which makes us believe that the market will be on bullish development for the next 2 consecutive days. So that being said, since we have the break above over here, the only concern that I have in front of me at this given moment is the fact that we have a resistance at 14.25 level. So believing that we will see a break above this level, I will still hold on to my long position from 113.05 level. I will not close that position, and my targets will remain initially towards 115 level. That's approximately another 130 pips from where we are now. And finally, my immediate and long-term target will be at 118.55 level, which is at 110% Fibonacci retracement zone. I do not believe that, if you remember, based on our discussion from Thursday, I do not believe that Bank of Japan will let the Japanese yen to appreciate at such a level that it will damage the Japanese economy. Therefore, it would be a suicidal action to actually short Japanese yen below the 112 levels. So look for that opportunity whenever there is a possibility to long, like possibility to long from 112.10 level, do long it, and your targets should be 118.50 level as immediate targets. This is for the Japanese yen. Now let's move on to gold. Gold, if you remember, we were discussing also on last week that gold has a resistance level at 112.41, although the kind of a rally took it above the 1,241 level. Nonetheless, we saw that level acting as once again a good resistance level. So any bulls that wants to enter the market on a bullish bias should look for a breakout above the 1,241 level. Meanwhile, I still am also convinced that you can place a buy limit order at 1,178 level, and that is 110% Fibonacci retracement zone. So any level that is going to be around 1,177 and 1,100. One second. So let me draw it over here. So based on our analysis, this is the main support level that we are looking at. And based on also our analysis, this is the most significant resistance level that we have in front of us. And that makes basically us look for a couple of candles. You can do it yourself. You don't even need any guru or anyone trying to explain you why that level is important level. First of all, you are looking on hourly time frame that the market is moving crazy on a bullish way, and suddenly something happens. Imagine like you get a basketball ball and you're standing next to a staircase. You hit the basketball ball so hard that your ball basically hits the stairs and jumps to the second level. But of course, there is a ceiling on the second level. So it touches it and it comes back again, touching the staircase, and then it falls from the stairs downwards to the down floor. It is how the support resistance levels work. So the basketball ball, you were standing here on the ground floor, you hit it on the staircase, it went up, it touched the bottom of it, or the top of it, then it found itself a small ground to bounce off again. It bounced off, touched the ceiling of the house, and it has touched again the bottom of it, and it's now bouncing up and down until it finds a ground so that you can catch it and throw it up again. That's in a nutshell how the support resistance level works like. Make your brain used to these levels, okay? So the most important levels that I have immediately, as I said, currently are at the level of 1,207 level, or 1,200 level to be more precise, and 1,177 level. Meanwhile, a break above, if you want a long, it should be 1,241 level. So break above the 1,241 level will give us further long opportunities. Meanwhile, a break below the current level, basically the previous hour's lowest low, if we see a break below, we will see the pair going first to 1,204 level, and from there onwards we will see the final target at 1,197.98 levels. This will be our bearish entries, but for now, because of last week's overall developments, I would stay away of gold I wouldn't really trade gold today. This is at least my outlook. Okay, now this is the fun part. We are looking at the euro dollar for the fact that we have at 3 o'clock Central European time the speech from Mario Draghi, and we see the market moving in a crazy environment for now, because of the fact that the pair euro dollar found itself a resistance / support over the weekend on Friday at 1.1235 level, and for now it has broken below that level over the night, and we are looking for possible continuation of this level. But if you also remember the previous week's analysis, we did discuss that the pair is bound to be on a sideways development between 1.1240 level and 1.11 levels. 1.1240 and 1.11 levels are strange sideways development ranges. So during these levels, I do not trade. So I will be looking for a break above the 1.1240 level to look for a bullish opportunity, and I will only be shorting below the 1.11 zones for this pair. So what is it that you should also look for today's Draghi speech? If you are gonna be looking at the Draghi speech overall, there are a couple of words that you need to look for. First of all, the word that we are looking for is that ECB will do whatever it takes. Okay, ECB will do whatever it takes. It is a very bearish word for euro dollar. It means that ECB will pump more money into more euros into the economy. When there is more of something, that something loses its value. So when there is more of euro in the market, of course euro is going to lose its value. So if you see that word, go short. And your short opportunity in that case, if it is happening, it can be just around 1.1160 level. Look for this Wednesday's lowest low over here, this candle. So you could actually short just below it, 1.1160 level, and your immediate target will be at 1.11. You will of course see some kind of small retracement, but if that is the case that we are going to be seeing, what ECB will do whatever it takes, our targets will be at 1.098 level. So we will be actually looking for short opportunity for 170 pips. Finally, we will finalize today's analysis on GBP USD, and if we look at it on weekly time frame, we can see that the pair had a continuation candlestick formation on weekly time frame. If you follow the candlestick analysis training that I've been giving. So this is a continuation candlestick. It means that I would be cautious on my short opportunities. It's not a reversal candle. So on daily time frame, we can see that the pair is very similarly to New Zealand dollar. It has its support and resistance level. If you make it more precise, it is this level that we are talking about. This is the support. It's a dynamic support, and we also have our dynamic resistance over here. So this was the resistance level. You can also make it a more immediate resistance level, and that would be over here. So this would be the immediate resistance level. So we are looking for, once again, a break above the triangle or break below, but our, of course, preferences are in line with the break above, for the fact that we have a weekly continuation candle. So what we will have in front of us will be just on intraday time frame. Let's look at it better. Just a break above the highest high of today will give us an opportunity to long the pair furthermore. So where is that highest high? We are looking at 1.4540 level. An immediate target will be 1.4570 level, and that level will continue. Then our intraday long-term target will be at 1.4670 level. Finally, overall, our targets will be approximately at 1.4870 level, and that will be the time that we will be exiting the entry for good. So this is for now all for today. We'll have another daily market analysis tomorrow. If you have any questions, you can feel free to ask. And if you want us to cover specific currency pairs during these analysis, feel free to write it to us over an email on a2zforex.com contact us section, and we'll cover that extra currency pair for you in tomorrow's or the day after's market analysis. Thank you very much for being with us. It was a pleasure to spend the last 30 minutes with you.